So if you're an NRI managing money across borders, you have likely come across a bunch of financial abbreviations in your bank statements, tax returns, or while speaking to your advisor. In this episode, I'll walk you through 25 essential abbreviations every NRI should understand, clearly one by one. These aren't just terms, they are the foundation of making confident financial decisions in India. Let's dive in. We don't compromise when it comes to your access to care. Because you deserve complete protection, not compromises. Follow Enrichwise for more insights. NRI. So non-resident external account. This is a bank account in India where you can park your foreign income in rupees. The best part, the money is fully repatriable, which means you can take it out of India at any point in time without any restrictions. And moreover, the interest earned is completely tax-free. NRO. So what is NRO? Non-resident ordinary account. If you are receiving money from within India, say rental income from your property, income from Indian investments, interest income, etc., or even gifts, this is the account to use. But remember, repatriating money abroad from this account requires paperwork and tax clearance from a chartered accountant. FCNR. What is FCNR? Foreign currency non-resident account. You don't want to convert your dollars or pounds to rupees. You believe they will remain strong. This account lets you keep your fixed deposits in foreign currency, no conversion, no currency risk, and still earns tax-free interest in India. Albeit, although the interest you earn would be a little lesser than the normal Indian rupee account. RFC, Resident Foreign Currency Account. For NRIs who moved back to India, this account lets you retain and use your foreign currency legally. It gives you flexibility while you are adjusting your life back home in India. PAN number. What is a PAN? Permanent account number. Think of this as your financial passport in India. Very important. Whether you want to invest, sell properties or file your tax returns, you will need this 10-digit ID. Aadhaar. This is India's biometric identity system. While it's not mandatory for NRIs in all cases, you may need it for certain services. You must be physically present in India to apply for your Aadhaar. PMS, Portfolio Management Services. If you want a professional fund manager to invest on your behalf, PMS gives you that. It's designed for investors with minimum 50 lakhs or more and offers tailored strategies based on your goals and risk appetite. AIF, Alternative Investment Fund. Looking for exposure beyond traditional investments like mutual funds and stocks? AIFs includes venture capital, private equity and more, but they are meant for sophisticated investors because it locks in the money for a certain period of time and for those who can commit more than 1 crore or more. KYC, just know your customer. Before you open any financial account in India, be it bank or mutual funds or stocks or demat, you'll have to go through a KYC process. It's basic verification of your identity using documents or like passport, PAN and address proof, which can now be often done online. RNOR, Resident but not Ordinary Resident. Very important to know for people who are planning to come back to India or have just returned to India after being an NRI for many years. This status bridges the gap when you return to India. For a couple of years, you can live here and still enjoy tax benefits on your foreign income and assets. A window worth planning around. DTAA, Double Taxation Avoidance Agreement. Paying tax twice on the same income, once abroad and once in India. Sounds unfair, right? That's exactly what DTAA prevents. It helps you to claim relief when both the countries tax the same income. TDS, Tax Deducted at Source. When you earn income in India like rent or interest, a percentage may be deducted before the money even hits your account. This is TDS and it counts as a tax you've already paid. TCS, Tax Collected at Source. Unlike TDS, this tax shows up when you spend, not you earn, when you spend. Say remitting money abroad or booking overseas travel or buying a car above a certain amount, it's collected in advance and adjusted later when you file your returns. AIS, Annual Information Statement. This is a digital report card of your financial life, generated by the Income Tax Department. It captures pretty much everything, income, interest, high value purchases. So it's very crucial to review it while filing your taxes. Now CA, who's a CA? Chartered Accountant, your financial guide in India. Whether you need help filing your taxes, remittances abroad, remittances certificates or compliance certificates, the CA ensures everything is above board and efficient. SIP, Systematic Investment Plan. Instead of putting in a lump sum, SIPs let you invest smaller amounts regularly in a mutual fund. It's a great way to build wealth over time without trying to time the market. LTCG and STCG, long-term and short-term capital gains. How long you hold an asset before selling it affects how it's taxed, especially more important for NRIs. Hold it long enough and you might be benefiting from lower taxes. This is the key for property, shares and mutual fund investments. PINS or PIS, Portfolio Investment NRI Scheme. This scheme is specifically designed for NRIs who want to trade in Indian stock markets. It ensures that investments complies with RBI rules and must be routed through designated PINS account, usually via your NRE accounts. FEMA, FEMA, Foreign Exchange Management Act. This is the law that governs how NRIs move money in and out of India. It tells you what you can own, where you can invest, and how funds should be repatriated, especially important if you have cross-border finances. GIFT City, Gujarat International Finance Tech City, India's answer to global finance hubs like Singapore or Dubai. It offers a liberal environment for NRIs to invest in foreign assets, open special accounts, and access tax-friendly platforms. PIO or OCI, Person of Indian Origin or Overseas Citizen of India. OCI gives you lifetime visa access and the ability to own most types of property in India. You don't get political rights, but you do get ease of movement and financial ownership here. ITR, Income Tax Return. This is your official tax filing in India. Even if you don't owe tax, filing an ITR builds your compliance record and can help your future financial transactions, including property sales or visa processes. RERA, Real Estate Regulatory Authority. RERA was introduced to bring transparency to real estate. If you are buying under construction property in India, checking the project's RERA registration is non-negotiable. GST, Goods and Service Tax. This is a single nationwide tax that applies to most products and services in India. If you run a business, purchase property, or pay for professional services, you are likely to pay GST, which is an indirect tax. NPS, National Pension Scheme, a government-sponsored retirement plan that also opens up to NRIs. It offers tax deductions and long-term retirement savings with a mix of equity and debt investments. So these are the 25 key terms every NRI should know according to me. These aren't just definitions. They show up in real decisions, where you park your money, how you send it back, how you invest, and how much tax you pay. The better you understand them, the better your financial choices will be. If you want any help applying any of this or invest your own money, you know whom to contact, the expert professionals with decades of experience at Team Enrichwise.